Live. Okay, we are live.
Yeah, I'm seeing that.
Alrighty. Okay. Good morning, everyone. AUAA USA, the Annamalai University Alumni Association, welcomes you for this nice tax and planning session, an interview with Umang Thakur. Good morning, and along with me, it would be Shanmugaraja, who's shortly called as CS. Welcome, CS.
Thank you, Muthu.
And we would be inviting now as well Umang at this point in time. Umang, um, welcome. Thank you for taking time with this, busy tax season. But we have a certain series of events that we conduct. One of them is current affairs, and we thought this would be the right time, for us to have you here, and then
Thank you.
go.
Thank you, Muthu. Thank you, CS and the entire Annamalai University alumni. It's a privilege to be, presenting to this group, this esteemed group. Arun has been my client for quite some years, and when he told me that this would be an opportunity for you to present, I immediately jumped into it, whether it was a busy tax season or not.
Yeah, I mean, wonderful. Arun was able to, get to you and then got it. So that way, we all can get your advice, you know, get your help, do better in our financial planning and tax planning.
Absolutely.
And talking about Annamalai University having a history of close to 90 years, we have people listening to, or would be listening in the future as well, going back to the YouTube channel, ranging from anywhere from 23-year-old to 90-year-old. So we would definitely need advice. And one thing that we heard from our people is, hey, don't just talk about people those who are going to earn the money, how to plan it. And they also said, whoever has earned enough wealth, how do we manage it? How do we save it? How do we pass on to the next generation? Whatever, the expert is you. So we are all looking for a great session here.
Absolutely.
Excellent. I would like to go ahead and give a quick introduction. Umang is the founder and owner of the InCorp Tax Act. He's also an enrolled agent, over 15 years of experience in the areas of taxation, accounting, and payroll. Umang has served a wide variety of tax clients, including individuals, small businesses, and trusts as well. So he has worked with a number of high net worth business owners and professionals, and I'm hoping some of us would be there soon along working with you. Umang's long list of clientele includes expatriates, foreign nationals, self-employed business owners, executives, college students, as well as in seniors. Umang also has extensive experience dealing with IRS and state issues. As an enrolled agent, Umang has the authority to represent his clients in any tax matters before the IRS. He has assisted many delinquent filers that have not filed previous year tax returns and are now receiving notices from the IRS and state taxing authorities. So with that said, the floor is yours. And although I got a brief introduction of you, but you may be able to express yourself as much more about yourself, and then we'll start
Sure.
from there.
Sure. So are we starting the slide deck? Do you want me to share the
Uh,
slide deck and go from there?
sure, absolutely, I can share that. Let me take that opportunity to share. Okay.
Perfect. So, I mean, as we are talking today, we are talking tax and financial plan. I was invited to present to the esteemed group on how this pandemic has left an impact and what do we do going forward. It's a crystal ball which nobody can predict as to what's going to happen, right? Every person coming onto CNBC and other channels would say, this is the way the economy would head. The stock market would tank. The real estate market would tank. It goes the other way. The moment they say something, it goes the other way. So nobody has a true answer, right? And we are all basing our judgments and assessments of what's happened into the past and what we think the economic indicators would do in the future. So as a legal disclaimer, to this group, any views expressed in this particular presentation are solely my views. Of course, we'll open the floor for debate and questioning, but I would understand that this is how I think and this is what I believe that the markets and the economies would head. But if there is anything, you can also write me personally over my email at umang@incorptaxact.com or call me on my cell phone number and we can get into further discussion. So Muthu, can we move to the next slide, please? Muthu, can we change the slide, please? Thank you. The agenda of this presentation will mostly be introduction, and I'm, fairly well introduced, into this particular presentation. So I don't think I'm going to spend a lot more time introducing any more about myself. But of course, as a part of a tax background and a financial background with an extensive experience, I have worked with many people from our community, from India, Pakistan, Sri Lanka, from the South Asian community, help them with their taxes, their financial plans, their investment plans, and kind of build a practice, a solid practice around anybody requiring to plan their assets, their taxes, and take it forward. I have clients with over 10 plus years with me, which only tells me that we have been doing something good for them and will continue to do the good work. The agenda of this particular presentation is going to be what did pandemic do to our lives, right? Mainly financial life, mainly what's going to happen to taxes, right? And then we are going to dive into tax plan and financial plan. So that's what is going to be our main agenda for this particular presentation.
Excellent.
Can we go to the next slide, please? So that's my brief introduction. I think Muthu did a lot more extensive introduction of me than I was personally going to do for myself. So I would, refrain from reintroducing myself. But I really appreciate the platform that the university has given me to present to its alumni. It would be a wonderful, working session with all of you. And of course, anytime in the future, if any of your alumni does need any help regarding taxes or finances, we are always there to support them, give them the right advice, and we'll go from there.
Excellent. I mean, one of them that I do see here is a real estate investor with multiple real estate funds. There's, I'm sure, quite a few people would be interested if you touch a few things on that as well.
Absolutely. Yeah, towards my investment plan, I'll talk about that.
Definitely. One first question that I had was being an enrolled agent. What does that mean? I mean, does that mean that you're an enrolled agent with IRS specifically to deal with clients, or?
That is correct. So we are licensed by the Internal Revenue Service to represent clients in all 50 states. Mainly, kind of anything related to tax notices or kind of administratively assisting clients who are delinquents or having issues going on with the IRS. We support them to kind of work that out. So we can represent anybody within the all 50 United States.
Excellent. Thank you.
So last year, uh, I don't know how many of y'all would want to remember what 2020 brought to us, correct? Of course, 2020 was a different year. Most of us, probably all of us, will never get to see this kind of a year again, and hopefully we don't. It was a very, very different year in terms of what's going to happen, anxiety, curiosity, everything related to money, jobs, businesses, investments. Nobody had an answer. It was a very uncharted territory for all of us. We don't know what was going to happen to the markets. We didn't know what was going to happen to our jobs the very next day. A lot of investment advisors whom I was hearing when the pandemic was just about to onset in March of last year, and the market started crashing, told us something about a U-shaped recovery, right? And when I say U-shaped recovery, the market was supposed to tank, stay down for some years, and then probably start coming back up, right? But guess what happened? We saw a V-shaped recovery, correct? We sold everything into the market, and then immediately following April, May, June, the market started bouncing back. Did anybody predict? Probably not. Did anybody know about it? Probably not. A lot of us were able to invest and make some good investment returns out of it, but a lot of us didn't, right? And that is because we were paranoid. We didn't know what was in future, and we were all trying to save, right? um, Irrespective of anything, what I suggest to every individual or every investor is the long term plan, the investment plan always has to be something that is going up. You may see some dips, some blips down there, right? But eventually, if you really see the chart from 1990 till today, the markets have always gone up, whether be it real estate, whether be it equity, be it any particular thing, right? So with that being said, right, your overall investment goals and patterns should not change just because of short-term things. Of course, pandemic, we had no clue what was going to happen, right? And a lot of people panicked in fear and started selling things. The same people went on to buy those same stocks later on when the market started coming up, correct? A reverse way, right? You sell high and you buy low. Instead, people sold low and bought high, correct? Now, with that being said, can you always time the market? You absolutely can never time the market, right? I mean, nobody can sell it high and buy it low, but you have to stick to your investment patterns, right? And that's what we are going to talk about it today. That's what we are going to say, what this pandemic did to us and how we are going to get better out of it, right? So, Muthu, can I move to the next slide, please?
Sure. Definitely, that's one thing that we all wish we could. That we can know
Of course, we
how
cannot
and
rewind
when.
time, but we can
uh,
change going forward, right?
that's true.
So, what did pandemic change, right? Pandemic changed the way we think, right? The way we save, the way we spend, the way we plan, the way we invest, and always the way we live now, correct? Every single person, whoever you meet, you talk, right, has become a little more cautious, right, in their own lives. They have seen probably the worst happen. Everybody was worried about their life, the family, and the situation around, correct? So
Yep.
nobody could actually, kind of get out of that silo and start thinking, hey, let's live a pre-pandemic life. There is nothing known as a pre-pandemic life anymore. We are all into that post-pandemic era, correct? Investments are not going to be the same. Finances are not going to be the same. The entire thought process of a human being is not going to be the same. So, do we need to adjust our tax plans? Do we need to adjust our financial plans? Probably, correct? With this new age post pandemic plan, we need to start thinking a little bit more differently, correct? Of course, it's the old wine in the new bottle kind of a thing, right? The entire horizon of investments remain the same. You talk about diversification, you talk about putting money into pre-tax things. They all remain the same. But I think what's going to happen is that people are going to pay more attention to those things now than they were paying to pre-pandemic era, right? That's what is going to change. So with that being said, let's move on to the next slide. So stimulus, right? We all saw possibly three large stimuluses come in the last 1 year, correct? Just a guesstimate, it was $5+ trillion that the government put into the economy, correct? Into these various programs. Small businesses got close to a trillion. Everybody, all the individuals were getting checks. They were close to a trillion. Unemployment saw close to 750 billion, right? I mean, most of the country's entire GDP is not even $5 trillion. And that's the money that we printed and put into the economy to sustain the economy, correct? If you really go to see, correct? I mean, $5 trillion is a huge amount of money that has to come into the economy. So the viewers have to ask a question to themselves: Is the market sustained, and is the market, kind of being there only because of all this money that came into the market? What if it was half of it? Do you think we would have seen a crash? I don't know the answer, and probably never would. Correct. So yes, we definitely got support from all the government programs that came that brought the money into the market. A lot of people got the stimulus check that I'm aware of that truly didn't need the stimulus check. So what did they do? They invested that money into the stock market, correct? So now the stock market got a bump. A lot of businesses got, certain loans that probably truly didn't deserve to get a loan, right? So now what did they do? They probably, expanded their business practices, bumping real estate markets. So a lot of this initiatives had different ways of the money to trickle. It's like water, wherever it found space, it started flowing in, right? People started buying into bitcoins. People started buying into GameStop. Huge amount of things that were happening. Of course, GameStop had a very different reason for it to go up, with a short squeeze. But overall, this entire $5 trillion truly found its way into the economy, right? And with the economy, with that, the economy got a good amount of support that was needed to sustain and go forward, right? But we don't know what's going to be way forward, right? I mean, the 5 trillion is done. The 5 trillion is in the economy. How long can this sustain? Nobody knows. But and Muthu, CS, you guys are part over here. And my next slide is going to talk about it. Is printing the notes and circulating in the economy, is that going to always solve a problem? Or will
Mm,
that bring problems? Correct. And so that's what we are going to talk about in our next slide, correct? Which is the effects of the stimulus. The stimulus is a printed money that's into the economy, correct? What does that do to us? So can we move to the next slide, please?
sure. I wish there are economists on the call now to talk along with you. So,
I would want to get their opinion. These are the three major things, that I feel are the effects that's going to have, of the stimulus. Increased risk of inflation, correct? Everybody is talking about it today. More money into the economy, right? The prices continue to rise. When the prices continue to rise, the inflation goes up, correct? Is inflation bad? A little bit of adjustment in inflation, of course, is not bad, but too high of an inflation is bad for any economy. So can we predict that? I don't think anybody can predict that, right? I mean, some days I hear economists saying, no, I think we have put inflation behind our back. The Federal Reserve is maintaining the interest rates in a proper manner. We should be, kind of okay to curtail all those things. And some days, the stock market news would come, we are very edgy about inflation and the market would correct by 300 points, right? As if somebody is really playing that game of inflation into the market to, bring the market up or bring the market down, right? But overall, in my opinion, $5 trillion of probably possible 25, $26 trillion of debt that we have as a country is a huge amount of money that has been printed, and it will always possess a risk of inflation, right? I mean, if inflation goes up, we see everything else going down. Absolutely. The next point is now our main point, right? Higher taxes. You ask an individual, you ask a person who is running a household, correct? Imagine you're running in debts. Imagine you have a lot of deficit in your own personal credit card, correct? How are you going to pay for it? There are only two ways you can pay for it. Either you do double jobs, which means you earn more, right, and pay your debts, or you cut down your expenses to pay your debts, correct? I don't think government would ever cut down its expenses, correct? The government only keeps on expanding and expanding and expanding, correct? So what happens next? The government has to increase the revenue or the income. For government, what is the revenue and income? Absolutely taxes, correct? So at some point of time, somebody, and again, I'm not any party supporter or any president supporter or anything like that, but my normal sense tells me that somebody has to raise taxes for the government to increase its revenue to pay down its deficit. Today, we are, as a country, we are making enough just to pay interest on our deficit,
mhm,
right? We need to bring down the deficit. If we don't bring down the deficit, I have no idea what kind of economic cycles we are leaving for our children, right? We just can't keep on printing notes and circulating into the economy and say, hey, we are living in a high deficit rate, right?
true.
In last 20 years plus that I have been in this country, I think I have seen deficit jump from 4 trillion to close to 24 trillion. Most of us don't even know how many zeros are in a trillion,
That's true.
right? I mean, yeah, it's just a number for us, but it's the debt that every family in the country holds, correct? So the higher taxes is not going to be avoidable for a long time. They have to raise it at some point of time. They have to find different alternative ways to tax us. Probably not just income tax, right? There may be different ways of taxing it. We'll start paying more property taxes, more sales taxes, so many taxes. I mean, if you really go to see in our entire daily life, there's huge amount of tax that we pay,
Yeah.
right? So that's the biggest challenge that I see probably in next 10, 15 years that's going to happen, right?
Mm,
And of course, the risk of decrease in dollar value. The more dollars that is printed, the more it's freely available, the value of a dollar decreases. That's a very common sense economics, correct?
that's true.
Now, a lot of us, invest into foreign countries, repatriate and patriate money, correct? Now, you have to be careful of how your dollar is going to do in future. Now, again, a lot of us also come from the Asia, which is, India, Pakistan, Bangladesh, and we also see our current currencies over there depreciate,
That is
right?
true.
We have seen 30 rupees a dollar to now, what, 74 rupees a dollar?
Yeah.
So anybody who invested probably 10 years back has actually half their dollar in today's time in India. So there are a lot of multiple things that go around, and these are basic things that I want people to start thinking about, correct? These are macroeconomic cycles. These are not individually related to your personal life, but this definitely has an impact on your personal life, correct?
True.
So every individual should, in my opinion, when you read, any financial news or anything like that, the word inflation, the word higher taxes, and the word dollar value has to be extremely, extremely important to you.
Yep. Now you scared me.
That was
I'm
not
sure.
meant to scare you, Muthu. In my opinion, it was just to highlight that sometimes we just turn around the pages and don't read it. But it's important that every investor starts reading these things.
That's definitely true. I mean, this is just highlighting this point. We'll start making a lot of people think through about their investments, about their planning of how they wanted to invest, how they wanted to secure what they earned.
Correct.
Yep. Thank you.
Perfect. So can we move to the next slide? And
Sure.
I'm open to questions and debates. So if there is any questions in the meantime that you get as a group, I would like to absolutely answer them.
Sure.
So plan, right? That's the mantra now. We have to plan. We have to do a tax plan. We have to do our financial plan, right? A plan can be a year plan, a 3-year plan, a 5-year plan, a 10-year plan, right? So you need to have a short-term plan, a medium-term plan, and a longer-term plan, correct? A short-term plan will adjust itself every year or two, correct? A medium-term plan, probably you will kind of have it 5 to 7 year plan, correct? And a longer-term plan is 10 plus years. So generally speaking, in our regular life, correct? A longer-term plan is probably our retirement plans,
Right.
that we will be done with our work life, we'll be done with our careers, and we're more focusing on saving money for probably when we turn 60 or 65 and we decide to retire. How are we going to spend our next 15, 20 years that's left of our life without earning, right? A lot of us may see social security checks, a lot of us may not see social security checks. Again, that's a very, very difficult area to predict, whether the funds will be left for all of us or it will extinguish,
Correct.
right? So you have to plan your financials based on the understanding that there is not going to be any government support. You have to plan your retirement in such a way that you expect to live 20 years even after you retire at 65. So probably if your longevity is till 85, there is 20 years of your life you're going to spend without making a dime. And that money is going to come from the money that you save today and grow for future, right?
True.
So very, very important to have all these three plans. A lot of us have small kids, who are ready to go to college in next few years, right? That's our medium term plan, right? We need to have them through college. We need to pay their tuitions. We need to pay our mortgages. So a lot of things goes into it, right? And of course, the short term is, people who want to kind of invest for a year or two, ride with the economic cycles, and see what happens. Some people have some investments to make in a year. So those are shorter term plans. But every person needs to have taxes and investments going parallel, right? You cannot
Very
have
true.
a plan without considering both these areas.
That's true.
A lot of my clients that I get, and very surprising, they kind of invest into something. Let's say a stock market stock, right? They invest into something. Right, around 11th month, I see a lot of them sell their stocks, right? And when they come to me and they say, "Why are we paying so much taxes?" And I'm like, "That's because you're now getting hit by short-term capital gain. Only if you would have waited one extra month, you probably would have saved a lot of taxes by going into long-term capital gain."
True.
Okay? I don't expect every investor to know that. I don't expect every client to know that. But a little bit of basic knowledge would save you hundreds and thousands of dollars in taxes over a longer period of time, right? And that's where
Correct.
that plan comes into play.
Mhm.
So let's
Oh,
move.
that
One
Sorry.
such questions from the members. What is the best time? Okay, in terms of short-term plan. So within the year, right? So if let us assume that I'm the taxpayer, I'm earning money. So I have a family. So my family also, my wife is earning. So in that case, what is the best time to start the planning so that you can either have investment in 401k, 401k, or any other plans, so that we will not end up paying much taxes. So to reduce the impact on the tax paying to Uncle Joe, so what would be your advice? What is the time frame we could start? So if you could give more on that, that would be helpful.
Sure. And if I understand the question correctly, and I understood this question in two ways. When is the best time during the year to plan? If that's the question, then, of course, sooner in the year that you start planning, the better it is, right? I mean, for instance, if you're planning for 2021, I mean, ideally speaking, we start our tax planning meetings with our clients somewhere in the summer of 2021, right? Because by the time the year has ended, it's too late. You can't do any changes to that year. You can't go back to your employer and say, hey, adjust my 401k or adjust my health savings account or adjust my flexible spending account. A lot of that has actually diminished or expired by the end of onset of the new year, right? So
that's true.
planning for that particular year has to happen no later than summer of that year, right? Because that is what will give you enough time and runway to plan your finances and your taxes.
True.
On the other side, if I were to take this question, when an individual should actually start looking into these things, sooner the better in their life, right? You are going to be late if you think 10 years later, right? We start planning for actually students, right when they are 16 years old and when they start making money, and we ask them, put the money in Roth IRA account. Even
Mhm.
if you're working in a McDonald's or KFC or any of those, just to make your pocket money, take that money and put it into Roth IRA account, because it's never too early to plan for these things.
Very true.
Yeah, excellent. Yeah, I think the question is anyhow, it's a twofold questions.
Sure.
So very well answered. Thank you. I think
Sure.
can continue with your presentation. Thank you.
So let's move on
Right.
to our next slide. Next slide talks about tax plan. Now, of course, taxes. I mean, if you were to read the entire IRS publication, it will take you years and years and years. And of course, within the span of next few minutes, I can't go over every single aspect of tax plan that's involved. I'm going to limit myself to a few key pointers that would help individuals. Of course, on business side, we can do a whole lot more planning, as the tax plan is more today, supportive to the businesses than individuals. And I'm absolutely open to discussing and talking to any individual who has their small business or medium or large size businesses who need planning sessions with us. But those are some of the things that we kind of work on the business plan side. Ordinary and necessary expenses, any expense that is business related, you can absolutely write off, right? The only two things that you need to remember is the business expense has to be ordinary in nature and necessary in nature, right? You can't go buy a Ferrari or a Lamborghini out of your business and say this is necessary. The IRS is going to question you. How is it necessary than you driving a Toyota or a Nissan, right? So you have
True.
to be cognizant and careful of those facts. And that's where, certain things that we kind of plan on the business side, which will be extremely helpful to individuals. But I'm going to spend a lot more time on the individual planning side, because I think that's what most of our audiences is about today over here. Um, Deferral compensation, right? Now, how do you pay lesser taxes, right? And I had a very interesting conversation with a client of mine. I said, how would you pay lesser taxes? And he said, I'll make lesser money. I said, listen, that is not the idea. Okay, the idea is for me not to tell you make lesser money. Make the same amount of money, but make a lesser taxable income. Okay, what is a lesser taxable income? Which means, let's say you make X amount of money, but you get taxed onto X minus 10% or X minus 20%. That's your lesser taxable income. Okay, so you take that money and put it for future. That is your deferral compensation. Okay, which is your 401k, 403b, all those 400 plans that you hear, your IRAs, individual retirement accounts, all those plans would take the money out of it, right, and park it for future. Now, of course, does it mean that you're not going to pay taxes in future? The answer is no. You are going to pay taxes when you withdraw that money after your age 59 and a half or 60 years old. You're just deferring it out, right? But generally speaking, what happens is we all are going through our peak earning years, as you see, right? And in our peak earning years, our tax brackets are much higher, right? So now think about it this way: every individual is allowed to put, let's say, $19,500 into their 401k account, or if you're 50 or above, it's 6,000 more, approximately 26,000 into their 401k account, and you are on an average or the highest tax bracket of say 24%, right? And state have their own taxes. Like I'm in Georgia, and Georgia has its 6% state taxes. So roughly speaking, I'm talking 30% tax rates, correct? You take that 19,500, and just for the sake of this conversation, I rounded off to 20,000. You take that 20,000 and put it for future. You're actually directly saving 30%, which is $6,000 in your taxes right away. Of course, will your cash flow get impacted a little bit? Absolutely, it will. But
Yes.
it is better than paying Uncle Sam, correct? Now, a lot of arguments that does come to me is, but we still have to pay taxes in later years. Well, absolutely you do, but you can control, right? You don't have to withdraw that money when you turn 60 immediately. You are allowed to push that out till age 72, which is the required minimum distribution age. Even at that age, you're only supposed to take your required minimum distribution, which could be about 4 or 5% of the money, correct? So what you're doing is you're staggering that money for future. You're using and planning that money for future. And now, when you are at a highest tax bracket, you're moving that money from a higher tax bracket saving to when you retire, you probably would be in a 10% tax bracket, correct?
True.
So a lot of individuals miss out on it. A lot of individuals, do not do full contribution. Many individuals tell me that I do full contribution, but according to them, a full contribution is equivalent to what the employer matches. If the employer is matching 3%, they are doing 3%, and they say, yes, I've done my full contribution. That's not true.
Very true.
Yeah, you're allowed to do up to 19,500. Any person who has an opportunity to do it should do it. A lot of people, their spouses are not working, right? And they are still allowed to do an individual retirement account for spouses. I suggest that's the best plan to do it as well, right? You can do up to $6,000 if you're under age 50, or seven if your spouse is age 50 or over, into a retirement account of their own, even if they are not working.
Mm.
Again, if it's a traditional IRA account, it will give you a tax saving under certain circumstances. Lot of them invest into Roth. I do like Roth products, and for the purpose of this audience over here, Roth is something which is opposite of your traditional plans that you see. Okay, you invest the money today, you will not get a tax saving, but the money grows tax free, right?
Mm.
When you retire, that entire money that you get is going to be tax free. I always tell my clients to kind of do some portion in Roth and some portion in traditional. So now you're getting best of both worlds. You're saving some taxes today, and in future you're going to get a lot more money, tax free.
True.
So wise planning, this is where it comes, correct? Similarly, college savings plan. A lot of states have their own 529 plans, right? College savings for their kids. Imagine, if the kid decides to go to a private school, or even a public school, where today the cost of education on an average on a yearly basis is 25 to $30,000, even in a public college, public university, right? If you have to come out with 25 30,000 times 4 in next 4 years, correct, it may be a big dent onto your pockets.
Yep.
So might as well, why not plan, why not put 4,000 to 5,000 to $6,000 a year into college savings plan when the kids are younger, right? Yes, is it going to affect your cash flow on a monthly basis? A little bit. But what that does to you is you can actually use that money when the kid is ready to go to college, and it won't dent you any further.
Mm.
Most of the time, when the kids are approaching college, you're very closely approaching your retirement, right? And that,
Very
that
true.
that gap between the kids going to college and you retiring is not more than 10-15 years. So now again, if you have to save for your retirement, it's going to be a big task at that time,
Yep.
right? So when you're younger, put money that time, right? A lot of tax credits. A lot of people don't even hear about tax credits, right? Electric vehicle, like Tesla used to give a credit. Now, there's a lot more electric vehicles that are there. Up to $7,500 tax credit was available. Right? A lot of folks don't even know about them. They should be talking to their tax professionals and seeing what credits they can avail. Right? This could be a dollar to dollar tax saving on their tax returns. Right? Most of us, who would go online and prepare our taxes may not even read or know about it,
Right.
right? So it's always good to contact a professional and find out, hey, what can I do to save my taxes? Some days I may not be able to help you, but there are days when I'll be probably able to save you at least enough to make my fees and save you some money,
Very
right?
true.
So it's probably worth the time at that point of time. Similarly, health savings account, right? There is a lot of employers provide HSA benefits, right? Health savings allows you to put
Umang,
up to,
before you jump on to the health
sure.
saving account, so when we are touched about the college saving plan,
Uh-huh.
so sometimes there is a debate or the discussion going around whether you want to go with the 529 or you want to go with the Roth IRA or some other investment plan other than this, like investing in a stock market or creating an account that will yield more returns than the 529. So what would be the advice you give for those kind of situations? So this is one of the questions posted from earlier from one of our members.
Oh, very interesting question. I come across this almost from every other client, right? A lot of people tell me that, if you invest into college savings plan, my kid may not get scholarship, right? So
Exactly.
in a way, it is true. You would not get a need-based scholarship. But how many of our kids would actually need a need-based scholarship, right? Looking at our tax return, the university is anyway going to say your kid doesn't need a need-based scholarship, right? But merit-based scholarship probably won't get affected with the college savings plan. Now, great question, CS, from your side is that should I invest traditionally into 529 plans, which offer 6, 7, 8% returns? Or should I invest it myself in my E-Trade or a Ameritrade account where I know I can make 12, 13, 14% returns? Correct? Um, Again, it's how good of an investor you are, number one, and the taxes associated with it. Correct?
Yeah.
When you invest into a college savings plan and you use that money for education purposes, the growth is tax free. Okay. When you invest that money outside of the college savings plan into any direct stock market investment, it has its tax implications,
Mm.
right? And most of you would be good with numbers, so I'll throw in some numbers. Imagine you are growing 6%, right? Your money will double, and there is a formula of 72. Your money will double in 12 years, because 72 divided by 6 comes to 12. Okay. Um, if you do the same thing with 25% taxes, you have to do the same thing at 96 divided by 6, which is 16 years. So if you were not to pay taxes at 6%, you would double it in 12 years. If you were to pay 25% taxes, you would double it in 16 years, right? So the tax element is extremely important. A lot of clients would be in a higher tax bracket, right? And that higher tax bracket, and if they do a short-term transaction, will probably shave 25 to 30% of that earnings. So if you're making 10 or 11% and giving away 2.5, 3% to the government, you come back to the 6, 7%.
Oh, okay, got it. Okay. So ultimately, it evens out.
Right. So I mean, personally speaking, I think not. I mean, you can always, have your own investments, but try to use college savings plan because a lot of state gives you deductions too. For
Mm.
instance, in Georgia, we save our 6%. If I were to invest, $4,000 for my child, I would save $240 instantly on taxes, and the growth will be tax free too
Okay. Yeah, that sounds good. It varies based on the state to
on
state
the
what
state.
is.
Yes,
Okay.
absolutely. And there are certain 529 plans which you can invest, which is not a state driven, right? But they give you good returns still.
So is there
So
anything you want to throw or you
I've
want to
seen
suggest or any names?
I've seen some Delaware plans. I've seen some Vanguard plans, and I can circulate it after this meeting to you, which you can circulate it to your group.
Sure. Okay.
Awesome.
Thank you.
That would be helpful because college savings always there are. I don't know whether it's truth or myth. A lot of people have it. They think, oh, once you start investing, you don't get the opportunity to get the scholarships is one. And somebody else was telling me the other day that once you invest and if you get the scholarship, then what you invested is gone. It's not yours. You can't take back. And
Again, that's a myth. So a
true.
lot of yeah, a lot of people don't read the rules around or deep enough, right? So yes, you can. And the best part about college savings is you can roll over
Ah,
from one child to the other child, or even to your grandchildren, or even you may want to go to the school back, right, to do your master's or PhD. Who knows?
yeah.
So money won't go waste in short.
Okay. Sure. That's
Coming to
go
health
ahead.
savings, right?
Right.
Health savings again offers a great tax benefit, right?
Correct.
People always get confused between flexible spending accounts and health savings account, right? Your FSA is you use it or lose it. In a year, if you don't use it, you're going to lose it, right? HSA on the other side, which is your health savings account, rolls over from year after year after year,
Mm,
okay? And you can put in $7,100 into it for your medical expense purposes in future. Now, healthcare expenses will continue to rise, correct? Medical expenses will continue to go up. We all would require some sort of, copay, hospitalization, any of those expenses in future. Even simple expenses like dental and vision and all those things, correct?
true.
If you are opting for a high deductible plan, right? If the family is fit and healthy, right, and you don't foresee any major expenses, right, go for the high deductible plan, which is basically, of course, lower premiums. So you would save some of your premiums. The employer will save their premiums and they will probably fund your HSA account. Some of them actually give 700, 800, or $1,000 into HSA account for their employees, correct?
True.
And then you fund the remaining into it and use it pre-tax, right? Because most of us are not able to get benefit of medical and dental expenses on an itemized deduction, because in order to get that deduction, you have to have more than 7.5% of expenses over AGI, right? If your
Correct.
AGI is even 100,000 on an average, 7.5% is $7,500. So the first dollar deductible will be, your medical expenses over 7,501. How many of us actually spend that kind of money in medical expenses,
Right.
right? But we do have co-pays, we do have dental, we do have vision, we do have, normal medication. Use your HSA account for that. At least you got pre-tax medical benefits,
Sure.
and you're not going to lose it. It's going to roll over,
That's true.
right? And there are certain HSA plans beyond $2,000. They also invest for the money to grow within the HSA account,
Mm,
right? So the simple changes to your own investment pattern of 401k, 529s, HSA, will bring your tax bill down considerably if you plan it well,
that is true. And
right?
then when it comes to FSA, you mentioned about yearly, right? You have to use it or lose it.
Correct.
So, because we're talking about post-pandemic, in March of last year, all of a sudden we were all shut down. There's, lockdown, too many activities were not happening. In FSA, whoever is invested, uh, was there any relaxation from IRS that they
It
can,
was.
oh,
It
okay.
was. So they are extended one more year to spend that money at this
Oh,
point of time, right?
okay.
So the IRS has basically, kind of put a circular out saying, we understand that you're not able to extinguish your entire thing, which allows you to, kind of give you more time to spend that FSA money. So you won't have a tax implication on it.
Excellent. And same with this year, right? I mean, most of the people, those who have, this is all part of your paycheck. People at some point in time wrote it, okay, this many percentage is what I'm going to put it in,
Right.
and they forget about it. They
They
never
forget
even
about
care, yeah, what goes into the, different accounts.
right. And most of the time, we get to see when we are doing the taxes around this time of the year, March, April, and we talk about them and they're like, oh shoot, the deadline was March 15 and we forgot about it. Right. So, I mean, yes, people have to be cognizant of where they're putting their money and how they're going to use it.
Correct.
Right.
Yeah.
So, and the last thing, right, capital gain planning, absolutely important plan. One of most of us invest into stock market, and many a times when I come across investors who come to me, they would book all their profits. Yes, I booked profit. I'm going to pay this much of taxes, and I'm like, did you not have any loss-making stocks in your portfolio? Were you 100% winner? And they would be like, no, there are some stocks where I'm losing huge amount of money, but I don't want to sell. I know they'll come up. I'm like, what if you would have sold it last year, right? Offsetted that losses with those gains, waited for 31-day rule, which is the wash sale rule, which a lot of people again don't know about, and bought those stocks again, correct?
Mm,
You would have at least offsetted your gains against those losses, right? Which is basically harvesting. You have to, kind of better yourself in terms of with every gain, I'm going to see something in my portfolio that is loss making to offset that, right? What's the point of paying taxes when you still have loss making in your portfolio? And remember this thing, if you sell loss making and if you're in negative, the IRS only allows you to deduct 3,000 every year,
that's true.
right? I have clients who are, basically sitting for 30 plus years, still deducting 3,000, and never playing into the stock market again because they've burned their fingers, right? Probably till the grave, they'll be only using 3,000. So might as well, when you book your gains, book your losses to offset those, right? We try to see, where maximum you can come up to negative 3,000. So if you had a positive, say, $10,000 gain, and if you have losses in your portfolio and you book negative 13,000, not only are you going to pay taxes on this 10,000, but you're going to take a negative 3,000 to offset your other income.
The revised planning. Yep. Not
Yeah,
many people
simple
think
thing.
that
Again,
way.
very,
Yeah.
very simple thing that you can do it yourself. You don't need an expert to plan that for yourself, right? It's just that we need to look through our portfolio and say, let me book this. But remember, there is a wash sale rule. If you love a particular stock which is loss making, wait for 31-day rule before you buy that stock again. If you buy it within 31 days, those losses will not be allowed,
That's true.
right? So I think those are most of the things that you can kind of talk about on the individual planning side, on the taxes.
Sure. I mean, definitely this helps. And most of the people tend to think that way, as you said. Oh yeah, I made money, but they are at loss right now. But I'm sure I'm waiting on to it because I want to hold it. Someday it'll come up, right?
Correct.
I mean, I've seen people do this, and then it keeps crashing and lose their
They say
money.
never fall in love with your assets. Love your family, but don't love your assets.
So
I think,
Oh, I
wow.
see.
I see.
I see a nice you know smile. I hear a nice laugh here. That was our Professor Madhavan who was
Umang, I really like what you said. You are quite right about capital
I'm
gain
glad,
planning.
Professor.
Yeah, capital gain planning. You are.
Thank you.
I think one of the things that you have to talk a little bit more about, write off bad debts. That is something many of us may have.
Right. Those on the business side, Professor, because a lot of us, on the professional services side, even, if you're running a technology company, lawyers, accountants, we have a lot of, bills that are invoices that are outstanding to be collected, correct? If there is enough doubt in your mind that this debt is not going to be collected, and if you have a bad debt rule in your books, saying 180 days or so, it's not a bad thing to, write off those invoices right now so you can avail of the tax benefit. Now, again, of course, later on, if that client does happen to pay you, you will recognize it as an income. But for businesses, that may be, instead of having account receivable, which is long, cut down certain AR, write it off, and then, take the tax advantage of it.
I think, Umang, there's a very interesting thing would be many of us, I should say, will have a personal loans given to people which have not been returned for a long, long time. But sometimes what you have would be a certain amount of money. We do not know how to really take it. There will be an auditor there about it. So generally, I have a rule. Let me tell you that if you write off something which is not receivable, and then within the limit of the maximum rate of interest tax you have to pay for your income level, then it won't result in some sort of auditing.
right.
For
Right.
example, your your tax now as calculated is about say 25% of your income and gross the whatever the taxable income is. Now you have somebody given to somebody something like $50,000. It has not come back. Investment you made many years ago, you didn't come back. As a friend that you now is done. Now, if I take $50,000, it will reduce my taxable thing substantially, but it might um, make people think there must be auditing required or not. If, for example, for our income level, average income paid by the average American family is about 18-20%, let us say. And then this year, you have got result in 25% for capital gains part of it. This is the right time to take that $50,000.
Right. So I think, and for the purpose
What do
of
you think of
understanding,
that? Yeah,
yeah, for
I'm
the
worried
purpose of
about that.
understanding, I think what Professor, and if I understand correctly, Professor, what you're trying to say is, of course, there is a bandwidth, right? I mean, as an $100,000 earning employee, you're expected to pay $20,000 in taxes. Just giving a hypothetical ratios, correct? And if the range varies, if you're kind of going into 15%, that means you're more triggering into the IRS audit. So you kind of keep yourself in that particular range of 18 to 20% taxable bracket of minimum alternative taxes kind of thing. And because of the stock income, if your income has jumped to 25% of that or 28% of that, that's when you use the write-offs to kind of bring it down into that same bell curve, so that you're not risking yourself to audit. Is that correct, Professor?
Yes.
Correct. And
No,
I
Am I
also
right?
absolutely.
thought, and I also thought he had, I mean, the question was more towards a personal bad debt,
Yeah.
right?
So
Okay,
there is, a personal bad debt is not an investment debt, right?
right,
And
right,
those
right.
can't be written off onto the individual plans, truly speaking.
That's what I was
You
going.
have to make capital investment. That's why it's called capital gains or losses, right? You have to make investments into a capital asset. Loaning to each other is not capital. It's a personal friendly loan that you're giving, and probably the only recourse that you would have is taking your friend to a small claims court to claim that money back. Again, a very tough and difficult thing, for most of us. But capital investments, you can basically take losses onto it to bring it down, but it's capped at negative 3,000. So everybody needs to be privy of that. Business has certain different rules, right? Business can give loans and still write off those debts, saying that okay, these were investments that we were making into this particular firm or other assets, and it didn't turn out well, and we lost the money. It became a worthless security, and businesses would have a lot more leverage to do that. But on the personal side, personal loans truly are not deductible because they're not capital in nature. Does that
Excellent.
answer your question?
Yes,
Okay,
excellent.
perfect. So let's move on to, so any questions on the tax side while we move to investments or financials?
One question which came out on the live thing is, what is your opinion about bonds with regards to tax planning and also now increased expectation of inflation?
Absolutely. So there are, of course, there are bonds that are, US bonds, for instance, right? US bonds may not be taxed onto your federal tax return. Again, if it's giving you a higher yield, higher return, and not being taxed, it may be a safer asset to be in, right? Over a longer term period, you may make a larger return if inflation goes up, correct? But so far, right now, I believe equity has returned more returns than bonds have, right? And depending on where inflation goes and the economic cycle goes, I believe equity would still be the flavor of the play, at least for next 12 to 24 months.
Oh, that's good to know. Okay, thanks.
Perfect. So we want to move to the next slide.
Sure.
All right. The next slide speaks about financial plan, right? I mean, we all know about all this. We know equity investment, real estate investment, and other alternative, right? So I'll start with other alternative first because that has been a lot of talk of the town, cryptos, right?
Mm.
A lot of us don't even know what cryptos is, including myself. I've not been in depth and in study into what a blockchain is, what a mining is, how is that Bitcoin formed. I mean, it just goes bonkers to me, coming from an accounting and tax industry, as to how burning of electricity even produces a Bitcoin, right? I mean, just maybe, you all would understand better coming out of the industry as to what that is. But see the rise, right? I mean, cryptos have gone up. Like Bitcoin has gone up from 10,000 to what, 60,000 in this, just in this year, like last few days, correct? Humongous return, and people are still chasing it, right? Do we feel cryptos is going to be the future? Every person you ask talks differently, correct? I was reading Warren Buffett's interview a few days back in his annual summary for Berkshire Hathaway, and he said he's never going to invest into cryptos because he doesn't understand it and he doesn't think that's going to be the future. I speak to certain millennials coming out of college right now, and they are like, cryptos is the future. We are not going to ever trade into gold and silver and any of those other things. For us, if dollar is not doing well, crypto is the next thing to go to. Correct?
Yep.
So depending on who you ask, you get different answers. Correct? I still personally feel cryptos is a very risky asset at the present moment. There is nothing tangible about it, correct? I mean, I would like to, if I buy something, I like to touch, feel, and see,
That's true.
correct? For instance, gold, right? I mean, traditionally, our families brought gold because it had a value. You could see it. You can keep it in your locker and sleep at night and say, Are itna gold, to I have it here,
Right.
correct? What are you going to keep in your wallet in crypto, right? They show that gold coin of Bitcoin, but that is not a true coin. Correct?
True.
But people are still chasing it. I'm not denying or disputing or disallowing anybody to invest into cryptos.
Right.
People should do it absolutely at their own risk, but it cannot exceed more than 5% of your investment budget.
That's your advice. I mean, as you said, there are other people who's challenging it and say, hey, life is all about digital these days.
Absolutely
Who knows? There may not be any currency anymore. They're even thinking about cryptocurrency, right?
correct.
So yeah, you're correct about.
On the
But
on
your
the other
suggestion.
side, Muthu, where I've been hearing is even countries like India is banning cryptos.
Hmm,
They're not allowing crypto. So if that trend continues, right, you have half of the world who is not going to accept cryptos. So then still US dollar remains the currency for international trading,
right.
correct? So depending, we don't know where these countries would head into their stand on cryptos. We don't know what value that $60,000 Bitcoin is giving me. If I give away my 60,000 US dollars to get one Bitcoin, what is the true value? Does anybody have an intrinsic value of a certain asset?
Sure.
Correct? Nobody knows it. So that's why I'm limiting my clients, to 5%, and if you're aggressive, at the most 7 to 7.5% of your investment assets into cryptos.
Great.
Because if you can ready to risk that entire money, then go for it,
Yep.
right? Because nobody has a true answer. Nobody knows which, people are predicting $150,000 for a Bitcoin. Some are saying it will come crashing down the other day. Nobody knows exactly. It
True.
doesn't have a chart. It doesn't have a history, and we don't know the future.
But
I'm
as you
sure this. Yeah.
sorry, as you mentioned, does not have any valuable assets. It's all in the dark money. But even though it's virtual money, so how it is going to be come as a global money? So once
We don't.
the
Yeah, that's
No,
what he says. We don't know where every individual investment that you make is, again, you calculate the risk accordingly on what percentage that you want to do it.
I,
But
I think you have to remember two things about crypto. Umang knows more than we all know about it. One is it is based on the assumption that right now is a managed economy throughout the world. So the currency we are talking about is only a number. It is based on account. So if we feel that way, then crypto is also an accounting method of whatever money you have. And that will enable you to increase the amount of money in circulation, even when necessary. That's what happened for gold. If you remember, in 1971, the price of gold was only $15, officially speaking. We
mm,
increased to 70 in 1972. And as a result of that, the total amount of money in circulating the whole world was increasing. The prices were increasing. So some people are saying cryptos. I think most of you have seen the value of the crypto increasing from about $2,000 this year to 53,000, 50 now right now $58,000. Oh, if you use Oman's principle, you should risk only 5%. You should be at least about $10 million 10 in asset to buy one crypto. Now, the interesting thing about this one would be now accepting it. And you see, now there's a new story. You can buy your uh, um, Delta car by giving one crypto. So if that happens to be a medium of exchange, that's what the word medium of exchange. The rupee is only a currency is only a medium of exchange. If that exchange takes place for two cryptos, you get one Tesla
Tesla.
car, something like that. Then it becomes a medium of exchange between the what the CS was talking about, something you can see. You can see that you're buying something, and that means it gives a value to it. Now,
okay, got it.
whether the crypto can be used into small segments of 1 by 10,000 or 1 by 20,000 is not going to happen. All right. That requires a lot of mathematical kind of things. So crypto's existence depends upon the existence of the multi-billionaires we have in our society.
Oh, okay.
and
Good
and
Yeah,
and
to
very,
accept
very well said.
and acceptance towards it, right?
And
Acceptance
then
toward
those
it.
who are
Yeah.
also willing to take a risk, who can
Yep.
do that.
Yep.
One of my fellows, or friend of mine, is more like my nephew. that he told me in Singapore, he bought a crystal. Uncle, I bought one. I said, how many you bought? I said, I bought 10. He bought 10 crystal for about $10,000 each about a year and a half ago. Now it's about $58,000. What are you going to do? I don't know what I'm going to do. So you
Correct.
can't
No,
cash it.
no, I
You
think
can't
Professor,
get
that
the
is
money
very
in
rightly
dollars right
said.
away. Can you get the money in dollars? Most people don't do that.
Correct.
Right.
You don't have the value of exchange for that. Once
Correct.
it assumes the value of an exchange principle, then crypto becomes an important currency.
True.
Right now, the dollar is also like that. Most of the people in India keep the dollars in dollar accounts. For them, it is a crypto, more or less, even though it is an account. So it depends upon the nature of the exchange that cryptocurrency can give rise to.
Sure.
If you feel an exchange, then what? But I don't think it's going to become an exchange for an average person. But it may become an exchange, medium of exchange for fairly well-to-do people. So
Yeah.
I think crypto will never become a currency that we all associate with. That's
Sure.
that's my feeling. It may not
Sure.
No,
become
I think that is very well put, because I was attending one of the conferences where all the CFOs were part of it, and upon talking to them, most of them are still not kind of looking into taking cryptos for their individual services or products. And the biggest challenge that they see is, today, let's say if I'm invoicing you for $58,000, you're giving me one Bitcoin, right? Tomorrow, if this Bitcoin comes crashing down to $25,000, all of a sudden I have to write off my assets by half of it. Correct.
Correct.
I mean, and that is going to put a big pressure on my balance sheet. So
Yeah.
without, unless and until this volatility stops, crypto doesn't become a thing for average person, right?
That's true.
I
That's
mean,
true.
we want to make sure that if I'm accepting Bitcoin for my services, that my balance sheet would be what's. I mean, I don't want to wake up in the morning and see it's going half,
Correct. The
right?
fluctuation of your balance sheet will
Correct.
also be a fluctuation based on that.
Correct.
Okay. So
So
given the the time limit that we have, let's move on
let's
to
move on. Yeah.
other
So I'll,
things. Yeah.
I'll quickly touch base upon the other alternatives, right? Of course,
Sure.
commodities,
Oh,
gold,
definitely,
silver,
definitely.
right? Metals. They always were in flavor. I think they will always be in flavor. Especially the consumption of gold in Asian countries like India has been so high. People have been, kind of investing into it. So they always will continue to, kind of garner the flavor of human beings, right? I mean, we are very tangible driven people, and we will invest into it. I think the rise may not be as exponential, but it will continue to rise. And as the professor said, right, I remember gold being $500 an ounce, I think in 2006.
Yeah.
Today it's what 1700, 1800, right? And it's still continuing to rise. So if there is a fluctuation in a US dollar that happens, gold will have a role to play. Silver will have a role to play. Industries do need silver, and silver is kind of at its highest output right now. And we are going to see silver pricing rising as well. So an asset class that you definitely should have, again, some 10-15% of your portfolio should go into commodities. Absolutely.
Sure.
Correct. Oil, a very, very difficult thing to predict. Correct. Right now, we are driving less. The whole world has been driving less. The oil prices have been subdued, but it will not continue to be subdued forever. As we start to move out, as travels increases, oil prices hopefully would probably come back to its normal level. I'm not saying an exponentially high level, but to a normal level, probably 70-75 dollars a barrel. So with that being said, it will have some pressure on our pockets, correct? But you may want to look at oil and energy stocks in the near future as the economy starts coming up, correct? And of course, foreign currency, right? A lot of people that I know trade into the forex market, trade into or hedge their investments. Some have money sparked into India or other countries, just because they see the fluctuation of the US dollar. So that's another thing that you may want to look into your portfolio, not have all your eggs into one basket, right? Having into different asset class and different currency class would always give you that hedge that you need into your portfolio, right?
Correct.
Moving into the real estate side, of course, we have seen the prices going higher and higher and higher. That's because the demand is high, right? People are still buying into the real estate. The residential homes are in demand, right? The reason is, of course, the interest rates are low, correct? The other reason is right now, the biggest challenge that I see is the government has stopped any foreclosures from happening, right? But
True.
if you really see one key indicator, which is the amount of people that are behind on their particular loans, is pretty significantly high. Now, what happens when economies come back to normal, right? Either they will be asked to catch up on their mortgage, or their mortgage will be adjusted to a longer term duration, or they will be asked to leave the homes, correct? If that happens, we may see some correction into the residential market. So keep an eye into that number. Once in a while, you will see flash saying, banks are having high number of loans that are in default. That only tells you that, one day or the other, either the prices have to correct or foreclosures have to increase and the prices will have some impact on it, correct? So very important key indicator. Commercial investment has been changed drastically this year, correct? I mean, strip malls, we see a lot of strip malls, that are getting vacant. A lot of offices that are vacant. Why? Because people are working from home. Wait till you see how the economy is head. Do people go back to work, or has working from home become the next generation thing, right? A lot of larger companies like Google and Microsoft has already announced that for next few months or even into this year, we will want our employees to continue working from home.
Yeah.
Lot of infrastructure folks are seeing that, we are going to save a lot of office space, a lot of cost, a lot of utilities, a lot of, real estate costs. Um, that opens up, of course, a new topic, which is data security issues, but that's a completely different thing. But that's always going to, kind of have a pressure onto the commercial real estate. So pick up the right real estate, and of course, as I told earlier, that I run a real estate fund, a couple of real estate fund, which is most on the commercial side. And if anybody's interested to discuss that further, always email me or call me on my cell phone and we can talk about that.
Sure. One question on that. When you say commercial real estate fund,
Mhm.
my assumption is that you manage a fund where people could invest and be part of it, and which you would invest in, real estate
That is correct.
investments, and then okay.
Yeah, so different types of real estate, right? Be it,
Sure.
let's say strip malls or hotel projects or even gas station properties, which is fetching rental. So we kind of diversify into different pockets, which are more rental income driven, so
Okay.
that, we can kind of average out to, 10-12% annual return onto those particular things.
Sure. Thank you.
Coming to equity investment, most of us, of course, probably have, a lot more money is going into here, either through our 401k accounts, through our retirement accounts, or through our individual accounts, right? In last 4 years, whatever happened, with the economy, no matter what, the Dow Jones you saw went up from 17,000 to 32,000. What's in future? I don't know, and I don't think anybody knows. Correct?
Correct.
Nobody can predict what's going to be the next 4 years. My personal gut feeling is that next 4 years will see some sort of a correction, some sort of a particular type of industries going up and some being subdued. For instance, I'm seeing a lot more increased activity into engineering infrastructure stocks, right? Those may not be a bad idea to invest into, because as the current administration and president starts rolling or pouring money into infrastructure, they will absolutely see going up. So if you go index specific, probably Dow Jones would be a lot more in flavor than Nasdaq would be. Nasdaq being the technology play. If you see a lot more technology stocks that have kind of jumped through the roof in last year or two, are trading at 60, 70, 80 times their PE ratios, their price per earnings ratio. So unless these stocks are able to keep up with the earnings, I see some sort of correction happening into the technology stocks, and which you've already noticed in last week or two, right? So be cognizant of where you are. Don't get stuck and love your assets completely. That I know this particular stock is going to go up. Keep churning or rotating your portfolio. Diversification is the key, right? No one stock more than 10%. No one industry or vertical more than 10%,
Mm,
right? So if you diversify that way, if one thing goes down, the other goes up, your average return still stays positive,
correct.
right? So again, a lot of these things an advisor would tell you the same way, right? But a lot of these things you can manage it yourself, right?
Sure.
Do not gamble, because of course, if you want to gamble, Las Vegas is the place to go. The stock market is not the place to go. uh, I see a lot of our clients, putting huge amount of money into one stock, betting that this is going to go up, right? I mean, we saw certain AMCs and GameStop and all those short squeezes that happen. Of course, it happens once in a while. If you want to play the trend, play the trend, but don't kind of invest into those stocks because you think it's going to somebody on the internet said it's going to reach $1,000, so it's going to reach $1,000. Invest into the value of the company, not into just what people are saying,
Sure.
right? So
Just
these are the
yeah.
three asset differences, and I believe you should have a little bit of everything in your portfolio,
Okay.
diversify it well, right? And keep on revisiting every few months, right?
Sure.
Of course, don't look at a shorter term horizon, correct? But at least, revisit this once every year with yourself or with your financial advisor or whoever you're working with, correct? A lot more knowledge is available on the internet nowadays, correct? And a lot
That's
more
true.
reading that you do will give you idea as to where the industry or economies are heading. And that's where I started with the macroeconomics because that has complete impact on this entire investments of yours.
Excellent. So that's what I was going to ask. I mean, where you did mention that rightly, that your portfolio of investment have to be in different percentage on each of them, and that's what an advisor would give a help. And as well, you mentioned revisit, at
Correct.
certain intervals. Could be every year, could be every 6 months, right? Depending on how the economy is doing.
Correct. And of course, sometimes you have to pull the plug at the very, I mean, not all of us are glued onto CNBC or TV to watch what's happening, right?
Very true.
But sometimes you have to pull the plug on certain stocks or buy certain stocks on the go. That's not planned, right? But keep up with the news, keep up with what's happening around you.
And I
That's
think it's worth mentioning, as Umar says, that is the people are concerned about paying the taxes on the capital gains. Whenever the asset goes up, let us say X thing goes from 100 to 200, double the value. So at that time, we're still thinking it's going to go up and not cashing it. So that is something is worthwhile for you to discuss about the people. You should not worry too much about paying taxes on the capital gains you made because you think it is right. Please correct me among in the earlier days, if a stock goes up by 20% or 25%, people would say, you sell it, don't keep it. All right. I'm talking about the 70s, the 60s, 70s, and so on. But now your portfolio, your stock that you have is almost tripled or sometimes definitely doubled. All right. You still think that he's still going to go up and not doing it. So what is your advice? It's better to
No, Professor, I think very well said because I'll tell you something. I still have that number, right? I mean, I still have 30%. If a stock jumps 30% in value in a very short period of time, I'm exiting irrespective whether it is a short term, unless of course there is a long story or big story behind it for it to keep on further going up. But if I see a jump of 30% or more in a very short period of time, I'm out of it. Because the main thing is, of course, I'm okay paying a little bit of short term capital gain on it, right? But if when it becomes 100 to 200, even if you pay 30% capital gain on that 100, you're still paying $30, right? But there is a possibility that the 200 may again come back to 100, and you just saw the ride without selling it because you're worried about short-term capital gains, and you kind of made nothing out of it, right? So yes, you have to play your bets in a right manner. You have to ensure that yes, if something is jumping up too soon, too fast, without any stories involved in it or around any background behind the jump, then something doesn't feel right, right? So it's okay at that point of time to book your capital gains and see what happens because you still have a year to plan around.
very true.
And I think I want you to correct. I don't know about other people. I just want you to advise. That is, many people seem to feel certain stocks, Microsoft, uh, um, something like that. Some of the stocks is going to go up. It's going to very well run company is not going to go down. The price has gone up almost 200% now, but still you keep it because you want to keep it like that. So, what is your advice on that kind of uh, uh, setup? We feel these four stocks, FANG stocks, you keep it no matter what it is.
Right. So, I mean, and one such stock I'll give you as G, right? A lot of us know General Electric as a 150-year-old company. A lot of
My
people have
gosh.
invested, right? We have seen
Yes.
it crash from $40 to $6, just recently, and now again it's back to 12 or 13. But very well run company, used to do amazingly well, but was not able to keep up with the new growth engines, correct? And which is why the stock diminished. So is it okay to, kind of have legacy stocks into your portfolio and not worry about it? Yes, but then you always have to revisit them, because if a stock has already jumped from 100 to 200, that is 100% return. Now again, to generate 100% return, it has to now go 200 to 400. It doesn't have to go 200 to 300, right? And it may not very well happen. So you may be stuck with that portfolio for that stock for years. Instead, you just kind of cash out and invest into something else. um Amazon, for instance, right? Amazon at $3,000, a lot of people are saying it's still a good buy. I still feel it's a good buy. But if Amazon were to reach 4,000, I may probably exit, right, and look into something else. So, giving your example of Microsoft, yes, having a strong balance sheet, huge amount of cash reserves, their cloud computing is doing extremely well, right? And of course, the CEO, Nadella, is doing extremely well job to kind of keep up with the growth engines. But will he be able to return the same, year after year after year without any acquisition or without any other growth engines? We don't know. And that's why it's always good to keep on churning your portfolio.
Well said. Okay.
Excellent.
The
Thank you.
good advice. I think all of you guys should take it.
Right. Thank you. So we'll move on to the next slide.
So I think that is what I had. I believe the next is just a thank you note for all
Ah,
of you.
okay.
Okay.
I
Then
mean,
Again, of course,
before,
I was
yeah.
cognizant of the time that we had to end this by noon, but I think I'm sorry I overran by 20 odd
no, that's
minutes.
fine. Okay,
I don't know.
that's
We
okay.
are
That's
good.
fine.
I mean, we can keep you talking for 3 hours. We are good with that. Okay. SCS, you have any more questions from
Yeah, I
the
think there
public?
is one question from the audience. I think any advice on how to position oneself in the view of potential future tax increases under the current administration?
Sorry, can you repeat that question?
Okay, do we anticipate any tax increases in the current administration? So that whether we can plan anything based on base. Okay, the question is any advice on how to position oneself in the view of potential future tax increases under the
Yes.
present administration.
So the present administration has already indicated few things that's going to change on the tax side, right? One such thing is the estate taxes, right? And estate taxes, President Trump had raised it to 11.3 million for individuals. By President Biden is talking about bringing it down to $4 to $5 million in the exemption limit. So anybody having more assets than that should actually go and get their estate tax plans done right now with an estate tax attorney to ensure that they are covered with the grandfathered with the older rules. Then the second thing that we may possibly see change in the capital gain tax rates, right? Short term will still be taxed at an ordinary tax rate, which is your regular tax rate, but they may have a bump onto the long term capital gain tax rate. So that's something that you may also want to pay attention to. They're already talking about income tax rates increases for anyone making over 400,000 in adjusted gross income. I have my doubts that they would stick to 400,000. It will slowly come down to 200,000 or affecting anybody who is making, 150 or more. But that's something we have to see. But long story short, next 4 years, we will see series of tax rate hikes, right? And again, it is to do a lot with the deficit that we are having. Irrespective of anything, having more deferred accounts, which is basically taking out more money when the tax rates are higher, is always the best strategy to do.
Okay, thank you.
Sure.
So one more question is regarding the 529 that just came up. Any suggestion on 529 plans for the states they don't have the state income tax deductions?
Yes, so and that's what while I was presenting, I was saying there are a couple of Delaware plans which are pretty good. Vanguard Fidelity has a good 529 plan which are giving good amount of returns. So and I will share that list with the group after the presentation as to what are some good 529 plans to look for if you do not have any state tax deduction or state plans available for you.
Okay, thank you. Thanks a lot. One concluding one question. So I think we touched up on at the beginning. So what are the options or to save money or investment opportunity for the seniors who have already retired? So is there anything you want to just to give some highlights and then we can conclude on today's session?
Sure. I think for seniors, a good plan probably, a lot of people ignore annuity plans, right? And at the present moment, you may want to look at the annuity plans. Again, that's not for the seniors, but if you're approaching there, because you want to have a sustainable monthly check, which is an annuity check coming to your doorsteps, till we pass away. And certain annuity plans give a good return. But who are already into retirement right now, right? For them, of course, your risk bearing capacity has to be a reduced one. I absolutely do not want you to play with cryptos or any of those things. You may want to look at a good managed portfolio, right? A good managed equity and bond portfolio, possibly having 50-50% or even more on the bond side, which basically gives a fixed rate of return. Because just by parking money into the bank is not going to fetch you anything, right? I mean, today the seniors are badly affected only because the interest rates are so low. Traditionally in this country, and a lot of you would possibly know this, because when I came back 20 years prior to this country, the interest rates were pretty significantly high. A normal car loan would cost you 8-9%. A normal home loan would cost you 6-7%. And for us, this is a very low rate thing, right? And when the rates were higher, the seniors were getting a lot more return by putting their money into the bank as well. They were able to get 4-5% bank interest, right? Today, banks are giving you 0.5% or 1%, which is not even beating your inflation rate, correct? So the best thing would be to have it in a managed portfolio, which will give you a fixed dividends or fixed interest every year, which will be enough to sustain along with the social security check your living expenses, keeping your assets as is, right? So that is where you need to plan. You need to have a fixed income stream come out of your investments, which will be a good sustainable living expenses for you.
Okay, thank you. Thanks a lot.
Excellent. Thank you, Umang, for your time.
Thank
And
you.
the best part is this is what I was saying that I wish we have the economist in place. Professor Madhavan have been in, he's from the 1949 year that he got into our university, and he has served as in the World Bank as well as an economist. So I'm glad he also joined in most of our discussions. So
So,
I'll let you continue with a
We
couple
all
of
thank
words.
you. We
I
all
just want
thank
to
you
thank
very
all of
much.
you.
Thank you very much. Thank you very much.
Thank you. Thank you so much for having me
Yeah.
on this platform.
Yeah.
I truly
Mm.
appreciate all of you.
Excellent.
Muthu, do you want
Yeah.
to give a vote of thanks? Or?
Yeah.
Yeah, absolutely, absolutely.
Before that,
Sure,
there's
sorry, go
there
ahead.
is two things that I was organization announcement. Umang, thank you. I joined late. I was outside planting trees in Atlanta. So,
Wow. Okay.
number one, those who are watching now or watching later, please do become a registered member at the Annamalai University website. We will post the link on the YouTube chat message. And also currently there is a fund drive that we are doing for the Central Instrumentation Project. And we have taken a 200,000 target. We're almost 1.25, sorry, almost
125 kV.
almost 125,000. We are reaching there, and we have another 75,000 to go. Please do donate liberally, and we'll post that link as well there. Thank you very much. Over to you, Muthu.
Sure. Thank you, Arun. As he said, as we are all proud alumni from Annamalai University, we do this events once at least a month now, and this time it happened to be the tax and financial planning by Umang. Thank you, Umang, for your advice and expertise. It was definitely great listening to you, and raised some horns. Basically start thinking about reinvesting, or how do I adjust my investments.
No,
I'm sure it is the same for several.
yeah, I
Uh,
would like to give an idea for you people to consider. Umang, you are in the business. There is one area which is likely to increase in importance in real estate. I think you might have heard about so-called granny flats in California.
Right.
Wherever you have got I'm sure it's going to be also true in Florida and other places. So this is likely to become an important type of investment to enable people to have a housing. All right, and this is something that you trying to do it for the Indian American community. You think of an investment vehicle where granny flats can be done, and then there can be instituted that could result in giving you a better income. Probably, I don't know about it, but that it is worthwhile to remember because it's becoming more and more important source of income for a lot of other people to do it. So that is something you may want to consider, and not as an idea that you think about it, and then you can bring people together to do it. You start with a certain amount of money and then see it. Also, you can also get a bank loan because of in the business. You will be able to get about 80% bank loan. All that the Indians have to do would be 20%. You have to manage it. So it's not easy, but it's an easy way of making money in the future.
True.
Absolutely. Good idea.
A very, very nice way to close this session, sir. A suggestion coming from economist to, you, Umang, as a business person who already has some funds, all you need to create is another fund for the granny flats, possibly. And we all listening there would be part of that. I'm just making it up, but that would be an excellent way to close this, session. Thank you so much. I would like to thank the board of Annamalai University Alumni Association of USA to let us have this session, and people those who have worked to bring in the session to Lively Arun Murray of 89 and CS Shanmugaraja of 1990 Mechanical. Thank you, everyone, and we'll see you next time with a different session.
Thank you.
Thank you all.
Maybe
Umang,
you may be your advisor.
That's true. That can happen. Yep. All right. Looking
so
forward to
Thank you
talk to
again.
people. All right.
Thank you.
thank you, Umang,
Thank you,
because
David.
on the busy time you came and gave the presentation. Thank you so much on behalf of
Thank
the
you so
board
much.
and
Absolutely.
association.
Thank you for the opportunity.
Thank you.
Thank you. Bye
Bye.
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 Jai Shri, I have not seen you for a long